If you own, operate, or manage a business, the tax hike in Auckland and New Zealand as a whole is going to affect you in some way. I'm Julius Bloom. I'm a business success partner at Amplify Business Success, and I want to let you know about the taxes and what you can do about them to ensure that they don't have any negative impact on your business, and maybe we can turn it into a positive. So let's look first. An increase in tax. This is an external factor. It's something we have no control over at all as business owners. This is a government-imposed policy, and it is what it is. Then we shouldn't be worrying about it. What we should do is we should take initiative to find out about the fuel tax, what we can do about it, and how it's likely going to affect our businesses, and then we need to take control and do something about it. This action or reaction is something that we can control. So the tax increases themselves, let's look at them. The Auckland fuel tax is the first one, and this is going to add 10 cents plus GST per litre to petrol, diesel and their biofuel variants. This is in effect now in the Auckland Council region. The nationwide fuel tax is going to be a total increase of 10.5 cents per litre on petrol, with an equivalent rise in road user charges coming in as well. This is going to be split up into 3 increments of a 3.5% increase over the next 2 years. The first is going to be on the 30th of September 2018, with future increases to be made in 2019 and 2020. So let's talk about the possible impacts on your business. Now this is going to be a little bit different depending on what industry and what type of business you run. However, what we need to focus on is we need to identify the issues that could result and come up with a solution to make sure that they don't have a negative impact. Again, if we could come up with a positive, that would be even better. So the first factor is going to be higher motor vehicle expenses. This is going to lead to other things like higher costs from suppliers and service providers, higher freight and transport charges, and then if we're a B2B, business customers might be looking to save costs, or they might look for alternatives. Consumers, again, they're going to have the same sort of thing. Their cost of living is going to go up, so they may look for alternatives or to cut altogether. Employees as well, those are the people that work for us so hard, and they are going to be subject to higher personal costs. So, to be a successful business owner, you need to work out how this is going to affect your business and ensure that we have a plan in place for each of those areas that's going to be affected so we can make a positive outcome. So let's look at those factors again in a little bit of detail and see how we can spin it and come up with a positive solution for each. The first of these factors is higher motor vehicle expense. The increased fuel tax is inevitably going to increase fuel costs and the costs of businesses to run motor vehicles. So we need to know how much your business spends on fuel and how much you expect this to increase. Fuel costs should be factored into what you charge your customer, and this will depend on the type of business that you have, but it may be a direct or an indirect cost that is factored in to the price of your good or service. The solution here is to increase what your customer pays in proportion to the increase in fuel costs. The next factor is higher costs from suppliers due to their prices increasing, and this includes services like freight and logistics. So many of your suppliers, like yourself, will be looking at increasing their prices. The first thing you want to do is you want to ensure you aren't blindsided by any price increase. So I would recommend talking to any major suppliers you have and discussing it with them to see if they're going to be increasing any prices, and if they are, when's this going to happen and by how much. Again, this added cost should be passed on to your customer so you don't wear it in your back pocket. This is a great time as well to price up any alternatives, see if there are other providers, and also review the margins that you're making in these areas. The third factor is business customers, if you're a B2B type business, may have higher costs and they may be looking for alternatives. So as prices rise across most, if not all industries, the businesses that you supply are going to see increased costs as well. What you want to do is you want to make sure that your business relationship is really strong and that you ensure that these customers know there are going to be some price increases if it will affect them. In some cases, price rises are unavoidable, but you also need to consider they may be looking for alternative options. So you want to be the person to talk to them about alternative options or look for solutions to give them more value for the same money they are giving you. The next factor is consumers are going to have higher costs due to a higher cost of operating a motor vehicle, and they may be also looking for alternatives. So they're going to be hit in the back pocket and they're going to feel hard done by. They might need to save money as a result. This may include looking for cheaper petrol or transport options. However, many may maintain their current transport and be looking to reduce spending elsewhere. Again, you don't want this to affect you, so it could be a great opportunity to innovate, add additional value to keep your customers, provide alternatives, or give them a lower cost option. The final factor is that employees are going to be subject to higher personal costs. Unfortunately, employees, like consumers, will feel like the losers in this situation, and they'll feel like there's nothing they can do about it. We also know that for employees to work at their best, they need to feel appreciated. So this is a great opportunity to show them that you care and that they are valued. A small wage or salary increase, or even a fuel allowance, could be added to their remuneration package and factored into the company's price increases. It is expected that the average fuel cost to a driver will be around an additional $250 per year, and you can make this a win-win, getting an employee that feels valued and is going to stay with you for the long term for very little increase in costs to yourself and your customer. There are also going to be some exemptions and rebates. There are a few specific exemptions where rebates will be provided. More information can be found on these at nzta.govt.nz. Do you want to know more ways about how you can improve your business and take control of your financial and personal life? You should contact us for a free 5-hour business consulting package today.